All right, week 4, we're going to start diving in deeper now. So you could take what you learned last week, all those examples. Hopefully, you left those on your chart because it would make this week even easier. But if not, you could just do it all over again. There's nothing wrong with doing it over and over again and building that habit. So you just automatically look for these areas without thinking about it, right? So we're going to go into the charts again and we're going to start giving you certain levels to look for and mark up that will start helping you time the change in market. So just want to say again, you'll never be 100% right, but if you follow the flow of the market, you'll be right a lot more than wrong. Everyone is wrong eventually, right? So let's go into it. Now, if you're familiar with ICT or just a lot of people talking about smart money concepts, they will use these terminologies, and the way they mark them up are a little bit different. But I do recommend if you want to dive in really deep and just go straight headfirst into drinking out of a water hose, which I don't recommend. ICT has a full breakdown. If you search these up, you could watch him break them down and get the information from him. But I did find it, the more I simplified it, the easier it was for me to understand. And uh, yeah, there's a lot of reasoning behind it, but if you just know to look for these areas and just keep trading simple, it'll help you move faster through the market. So I'm going to do it at a pretty basic level where you know what to do and how to use these without getting you confused with just drinking straight out of the fire hose. All right. So let's get into it. First ones and my favorite are the fair value gaps. And these are when big candles are produced, leaving a gap in between the candles. So the way to look at that is from this candle to this one to this one. You see how there's that gap in between? So that would be a fair value gap. Here, again, down to this, from that to that, there's that gap again, right? So let me mark it up to make it clear for you. And if we go the other way, just quickly looking, that one looks like they're touching. So this one right here is one. And up here, and then right there. So these are not like a end all be all. You're going to use a combination of all of these. And you could see if you use this, put the stop loss up here, you're still good, even though it went through it, right? If you put it here, entered here, put stop loss below this, guess what? You're still in it. If you tried to enter here, you would have never got filled. You entered here, you got filled. Stop loss would be below this fair value gap. You're in, right? So kind of went into like a little setup thing just to kind of get you guys thinking. Again, as the weeks progress, we'll go deeper and deeper and start getting these full trading plan ironed out for you. So those are the fair value gaps, right? Anytime there is a gap, you're going to want to mark it up because that could potentially be a key zone where price is going to react and either continue or it goes through it and then it might test it again and then continue going the other way, right? So those are the fair value gaps. Next one is order blocks, or OB for sure. I'm putting the abbreviations here because when I label on the chart, I'll be using these type of labels and it'll make sense for you. So fair value gaps, order block. Order blocks are where price is pushed down or up and just to go the other way. So a good one would be this one. So say price ever comes back into this area, it would be supported. And the reason why we're using this big area is because it's all consecutive down close. If we were going to use this one, I would just mark off this one, right? And then drag it out. So if price ever came back down, we could anticipate, I don't know if it does yet, which it doesn't, maybe price now because it's doing this, right? And it looks like it started that downtrend. by breaking this and not breaking this, price may come down here in the future, right? So we have this zone marked up. Also, that fair value gap right there helps us understand price. We should be taking shorts to this, the fair value gap, and all the way down to this order block, right? So another example, let's find one. So you could see here, price came down, went up. So this could have been an order block, right? If price did keep going past this up, but it didn't. And it created this last low candle before it went up. So once price started coming back down, we could say either this fair value gap or this order block will be respected. And that's going to help us on the day to day take shorts down to this zone until price is here. And then we have to wait. And we know it's probably going to be a little choppy for a while because we reached a major zone, right? So fair value gaps, there's a gap in between 3 candles. Order block, that last push before price flips around. And because we're going up, it's going to be a down candle. And if we're going down, it's going to be an up candle. And that's it, right? Again, we're going to stick to the daily chart, and you could move that and start drawing these up all the way through here. So you could kind of get an idea how price respects these levels, and you could start to understand you got to wait when price gets to these. So the next one is breaker block and mitigation block. Very similar, a little bit different, but really it's a block, right? It's a shift in price. So the difference is one goes higher and then breaks, and one, I hope I didn't cross that. One doesn't break it, and then it breaks, right? So very similar concept. You really, to get the exact name, you don't really need to understand it. It's just know what's happening. So we go down to here. We could see price down, up, down, up. Didn't really break this high, so we're not worried yet. It went down, created that higher high, right? So for me, we're going up, so I like to use that black candle right there. So if we mark this candle off and drew this out, we know we want price to go above this, which it did right here. And when it comes down, it's going to respect this. You could also use this whole leg, kind of like the order blocks, right? And you could kind of see it respects it more. I just use that top candle because it's kind of a zone I want it to break out. And we know this low now should be respected if we're going to go into that uptrend, which it happens. And we'd be on a lower time frame to start digging in for actual trades. I would not take a trade just off of this alone. But this shift above this candle shows me we should be going bullish. This now should be respected, and I may put this on the chart. I have them labeled, so I would do this and then put sell side. So now I know this area should be respected, and again, it did. If it was not respected and price came back below this, I would be looking at this and then shorts that downtrend. I'm thinking it's going to continue that downtrend lower. Oops. Gaps, they're kind of like fair value gaps, but there's actually a gap in the body. So let's see if we could see one. So I would have this gap on here. No, if we're taking buys, I would have this gap here. I would also have this gap, which I just saw marked up from body to body. And if the wicks do not touch, it's even stronger, right? But if the wicks overlap, that's fine. I go body to body. And For this, I would want price to support here if we're going to continue that uptrend. And it didn't. And it broke below this. So now I am back into the short mentality until otherwise broken up. Here, this gap, you could draw it out. And when price got to here, you could say it may either consolidate because there's more orders to be kind of filled in this gap, right? Or it's going to respect it and drop back down, going down below these. Now you see how when I'm explaining these, I'm giving you a story for both sides because, again, we're not 100% right. But if we zoom out, this was a long downtrend and this finally broke above, showing us its potential reversal. So we're in this zone right here. We're kind of in a consolidation area where we don't know which way price is going to go until it starts to prove it to us. And even here, until it gets above this little gap, I'm not really convinced. And you can see it kind of chopped around, went down, back up. So once price broke above this high right here, I'm more convinced that we're going to continue that uptrend for a while until proven otherwise. Those are the gaps. Now we're going to go back here and look at internal liquidity. So let me take all this off. It's getting a little messy now. So let's just mark off this recent one. So hopefully I could go back that far in a lower time frame. Actually, we don't need to go down. So you could see this is kind of that internal liquidity, because if we go on zoom out, this whole push from our low to our high, that's our like daily liquidity, right? That's how we're measuring if it's an up or downtrend. But you can see these littler lows and highs are the internal liquidity of this range, and that helps you start to define other trade ideas to take it to this low. If we are in a downtrend, we want this to be broken, right? So that makes sense for us taking sales from internal liquidity. And that's just kind of proving again. So now this range, it went below this. As long as it doesn't break above this, we're still good to reach this zone eventually, right? So we're going to keep looking for setups to take sales to this zone until what? Price proves otherwise, and we're going above this and continuing in a new uptrend. And this was actually just the first leg of that new uptrend, right? Oh, highs and lows, which we were going over. Low, high. Now we're in this range. So let's dive deeper now and know we're in this range. We are in an overall downtrend. If we zoom out, I would like to see lows get broken. So now if we kind of go even more zoomed in, we have this one right here. We have a new low and a new high. We don't want bodies closing above this, and certainly not above this one, if we want to take shorts. Now, people are seeing this and they're getting excited for longs, and they might start thinking it's going to come up here. For me, until it breaks above this, I'm still good for shorts. And if it breaks through this, it could be just a little liquidity grab of this area. Could be going into the order block and then back down, right? Maybe a fair value gap forms here, and we're ready for price to come back and continue down lower, right? So these zones, not 100%. You need to put that entire story from that top down, down, down until you get to that time frame you're actually going to trade on. And you have that story, that narrative to keep you in focus where that North Star is, so you don't get lost in that smaller time frame. Because again, if we go in this smaller time frame, we're like, holy, this is an uptrend, right? But really, maybe it's just filling this fair value gap. Since it was such a big gap, we need to get some orders filled in there. Maybe we take that liquidity, maybe this high, But the way it's moving, we don't want to get caught in this uptrend. We need to know once it gets to this area, we don't want to be in buys anymore because overall we're looking for sells to get all the way down here. So price may be just going like this until we get down to here. And when you're zoomed in, you think price is going to run, it's going to run, it's going to run until it doesn't. And you say, what the heck? I was following an uptrend, but really, no, you were in a counter uptrend in the overall downtrend. So there's a lot to take in. Your homework this week is to go back on that daily chart and reveal drawings and start to mark these up. Fair value gaps, order blocks, breaker blocks, mitigation blocks. Really, I just call them either I just call them a breaker for short. Either way, if it takes the liquidity or not, to me, I just call it a breaker. But if you do want to dive deeper with ICT and some other people, you will see that they're using these terms, right? So just start following price and marking these zones up. So you could see how price is starting to play off these areas and helps you navigate uptrends, downtrends. Are we in consolidation? If so, what's the range? Maybe I could start doing internal liquidity within this range and get you comfortable in the market with price action. And we're going to start getting going now, right? We got the basis down for this mentorship, and I'm going to start going deeper and deeper and explaining things in a more granular way so you start to understand, and we could start refining our strategy and your strategy, because you will need to have a separate strategy from what I'm teaching, because again, you're different from me, so my rules are not going to speak to you, and you don't want to fight the rules. You want a system that's profitable and works with you, and that's how you're going to become that profitable trader. Forcing a system on you because it's profitable for someone else, no guarantee it's going to be profitable for you if you're constantly fighting that system and going against it, and you're going to result in losing, blowing up challenge accounts, and all that stuff. So do your homework. Don't go to week 5 until you finish this. And if you're watching this before finishing week 2 and 3, go back. Do the mentorship. I was gonna package this and sell it, and I said no. I I I want to help everyone the most I can, the best I can. So I put this out for free, but just respect me that I put these in an order for a reason and go through the process, please, and it'll benefit you the most. So if you haven't already, click that subscribe button, that thumbs up. One training a week, all the way throughout the year, from start to finish to beyond, right? It's not going to be just day trading in this. We're going to go in later in the year. So now you're a profitable trader, right? Now what? How to set money aside and kind of plan for taxes, right? I'm not going to go into an actual tax system, but I want you to be smart about your money, how to kind of divide that profit coming in to long-term investing and maybe a personal account if you're doing funding accounts, so you are not reliant on other people. And if you play all your cards right, you're going to have a nice snowball collecting money for you, so you don't have to be at the charts day trading, and you're still having your money work for you, so you could really relax and enjoy life. So that's the point of this. I'm at that part where I'm splitting my money into long-term investing, because I want to transition from being in the charts every morning for a set hour trading, looking at price, analyzing, right? I want to be more passive in my future so I can start enjoying life more. So that is going to be our long-term plan for this. So we're just getting started. I kind of want to keep you guys motivated and sticking around by kind of hinting at the future, but let's learn price action for now and get deeper of our understanding of the markets. So hope you had all a good one. Peace.